So I'm pretty sure you guys will be able to post here, right? And we will have a few admins that will be able to post as well, to update you guys, on anything that is important, right? Notifications here. Will probably rename everything, right? This is just rough work, right? And we'll still have Telegram and, these two Telegrams here, channels here for the time being, right? And more than likely we will be implementing, anything that you guys need. So it's like, give us feedback, tell us what you want, tell us what you don't like, let us remove what you don't like, right? You have forums, you have chats that are different from forums where you can make posts and people can just comment on them, right? Hey guys, what do you think about this? What do you think about that? Then, you'll get feedback from your peers and me and, those of you that are already profitable, right? I am hoping that we can go live there. I'm not even sure if we can already. Probably we can, but I will figure that out. But yeah, this is what it will look like for now. There will be improvements. Literally, we are the first group of, people, or, I'm the first person to actually be, using this, to see this, right? So with that being said, we will begin our weekly analysis and, go over a few things that happened last week in regards to the market. So yeah, let's do it. You already know where we start at all times, right? We start with the economic calendar, right? This is, if not, one of the most important things. And the reason for that is due to the fact that, we literally have the times where we can expect price to either manipulate or expand, right? Whenever we have, red news folders, I don't think we will ever, be consolidating during these times, right? And also, right, the most important red news folders will be USD, right? Due to the fact that the US dollar is connected to everything, right? Everything reflects upon the US dollar in order to move, right? If there's no correct correlation, there will be no movement in price. If you don't see movement in price, right, within the trade that you're focusing on, then it will be, outside of that. And I'm talking about intermarket sequential SMT. So yeah, Monday we have news at, New York. So we will be watching Friday's higher and low, and we will talk about that when we go on the charts. We'll see where Friday's higher low is in respect to, the asset class that we'll be looking at, right? So if we have sequential SMT, and I'm just telling you this by just looking at the economic calendar, right, between Friday of last week, right, and Monday of this week, then, we should have a reversal, right? Doesn't matter which asset does it. Once there's a correct correlation, there should be a reversal. And Tuesday, right, if we, have the same thing between Tuesday and Monday, then of course we can expect a reversal. Already we can see that we expect, more movement, right, in regards to the pound than anything else. Why is this? All right, the US dollar news already, right, it will cause the pound to move. But due to the fact that we have this, we have US dollar news, and we have, news in regards to the pound, then we can expect, more liquidity to be flown into the pound. Let's just say it like that, right? We can expect more movement for the pound. So, just by looking at this, then we can just expect the pound to, be the better trade next week due to the fact that the pound, right, has more news than the dollar, and we don't trade the euro, right? And just make sure I'm checking. There it is. Right, so Tuesday, we have news in the London GBP. We'll probably see, if we see sequential SMT right between London and the Asian session on Tuesday. And note that, I am reflecting upon the previous quarters, right? Because this is the time when, you have London making the high of the day or the low of the day, right? So if you see news at, for example, 2 a.m., which is London in Eastern Standard Time, and we'll talk about time today, the actual time that the algorithm runs on and so on, but yeah. 2 a.m. Eastern Standard Time, then we will literally, like as of now, I'm already thinking about the Asian session. It's not even Monday yet, right? Much less Tuesday. I'm already thinking about the Asian session and expecting, this to happen. And it's not even in the charts as yet. It'll be Q2, right? Because it'll be Tuesday. And then London session will be Q2 again, right? Whenever you have two, let's say, cycles, quarters of cycles lining up. For example, you have Q3, then, Q3 within Q3, right? And whenever there's like a cracking correlation right there, then you'd usually have a high probability setup, right? And we'll talk about this, as we go along as well. 1 p.m., again, we have news again, the pound. At 1:15 p.m., we have USD news, right, on a Tuesday, right? Fed Chair Powell speaking, right? So most times whenever, things like these happen, they're unscheduled, right? Whenever the Fed just chooses to speak, right? It's unscheduled, and we can see that every day this week there's high impact news events, right? Why? Over the weekend, there has been a lot of stuff going on in regards to the geopolitical atmosphere, right? So due to the fact that, that happened, Iran and Israel, going at it, Iran literally, attacking Israel, all the blue, then they're like, okay, we're done now after, literally destroying parts of their country. Then you have Israel right now, saying that, okay, we're going to attack you guys within 48 hours, 24 hours, whatever it is. Why don't they just attack now on the weekend? Why do they got to wait until a specific time? If you get it, you get it. If you don't, you don't. So yeah. And then on Wednesday, right, we have Great British Pound news again, right? So basically, this week we will definitely be expecting sequential SMT just due to the fact that there is so much Great British Pound news and there's no Euro news, right? This shows that the pound will be, more likely to move than the Euro. And when there's a lack of movement, there's a cracking correlation, right? So yes, we'll see which day of the week, right? It's really hard to gauge the low or the high of the week right now, but like I'd say like Wednesday, Thursday, it's really hard right now due to the fact that every day has red news folders, right? This, it's not that it's hard. It's going to be hard to trade this. Once there is sequential SMT, then you're going to know, more times than not, right? The direction to expect order flow to, go in, right? Thursday, we have USD news at 8:30. And then Friday again, we have Great British Pound high impact news. Here, right? I want you guys to, pay attention to the previous week and the one before that, right? Currently, we're within the third week of the month, right? So here, right, this is the T-bond. Here we have the 10-year Treasury note. Here we have the 5-year Treasury note, or T-note, whatever you wish to call it, right? We can see that here during, Q2 of the month, price definitely did not get to this high, right? So this, was a failure swing, right? And then price broke down. The same thing happened here, and price broke down. The same thing happened here, right? Look how far price is away from this high, and price broke down. However, looking at the US dollar, right, we can see that, the US dollar, euro, and the Great British Pound, the Forex tried, the FX tried, and, right now I want you guys to just focus on the euro and the pound due to the fact that they are the ones that, move in or should move in tandem, in the same direction with the interest rate trials. Right, so here you can see we failed during Q2 to take the high of Q1, same thing here, and same thing here, right? We didn't even get to the equilibrium of this range that was formed in Q1, right? Here, right, we can see that during Q2, we had the euro trading above the high of Q1 and closing above it as well, right? Here, we have that happening as well, right? So price traded above, closed above it, right? And then here we had price trades here, fails to trade above this high, then it just completely broke down, right? Aiming for these lows, which, we had in our crosshairs. Here, right, we had the true open of the, let me draw it out for you guys, the true open of the month, right? So that will be here. I know most of you guys, like, you probably forgot about the true opens, but, it happens, right? You guys are bombarded with information. You're like, okay, we don't need this one anymore, but yes, you definitely do. So here, right, we have the true open for the British pound. Here and here, where is it? And here we have the true open for the US dollar, not the US dollar, the euro. Right, I don't need to draw the true open out for the dollar, right? Because we're just focusing on these, right? So here, right, exactly what we always talk about, right? We expect sequential SMT above a true open, right? This is the 4-hour time frame, and this is the perfect, literally the perfect condition, right? And this is why, right, if you remember last week, we said that, if price went above this, while price was here, right, while price was here, literally open on the open, what do we say? If price goes above this high, then we would expect lower prices. If it went below this low, we would expect price to go, for this high. Then we would expect lower prices. Here, right, we can see that price traded above the true open. And here on Tuesday, it broke down, but didn't fully reverse. But then on Wednesday, right, we had a spike up and then we fell. The same thing happened here for the, the British pound, right? This is the 4-hour time frame, right? And remember, we need the 4-hour time frame, to fall on a higher time frame level which would be the weekly time frame, whenever we are looking for high probability conditions. So there was literally nothing, more high probability than this right here, right? Here, also, right, we had hidden sequential SMT, whereas right here, we closed above this low, and here we closed above this low as well. But this wouldn't matter, right? Because if you just compare the euro and the pound to these, then you would already see the condition that was about to present itself, right? You see the move that was about to present itself right here, right? And I'll go down to the 1 hour time frame. Right? This candle was Wednesday, right? We traded above Tuesday, then we fell. Here, Wednesday, we traded above Tuesday, then we fell. Here, Wednesday, we traded above Tuesday, and then we fell, right? And this happened after we had this higher time frame intermarket sequential SMT. This is your lower time frame sequential SMT, or a lower time frame intermarket sequential SMT. So this is two stages which usually happens between the interest rate triads and the FX triad, right? With this, you don't really need to look at the dollar too much, but it helps, but you don't really need to, right? Because for example, right here, just by looking at these right here, right? You can see that this high was above this one, and again, this one was above this one, and the same thing here as well. We're not focusing on any gaps, any breakers, nothing like that. We're just looking at the highs on the, highs on lows right now. Here, right, we had price on Wednesday, failed to break above this high. The same thing happened here. It failed to break above this high, right? Here, right, on the 1 hour time frame, you can see that there was a close above this high. Remember that the closures are important. So if you're looking for a sequential SMT in regards to the weekly cycle, the weekly cycle is comprised of Monday, Tuesday, Wednesday, Thursday, and Friday, right? So you need to see a 1 hour close, like, that's what you need to see. And again, if there is not sequential SMT between the assets, in the triad that you're looking at, for example, here, we can see no sequential SMT here, but when we compare it to the Forex market, it is there. Do you understand? It's there and it will always be there. This is the reason why price turns around, right? This is literally the nature of price. This is what it is, and this is what it always be, because it can be no other way. So here, right, you'll be taking the true open into consideration, right? Which I saw a lot of you guys, caught this move. And literally, this is a 4 hour time frame. This is a real swing trade, right? Which happens whenever you have, price build up just like this, right? And it is better to see, I'd say diagonal consolidation, where you have, price failing to break below lows, then you have sequential SMT in a premium, a premium, right? Which is here. Premium, here's discount. You aim for here, price to go below here. And also, right, let me go to the weekly time frame so you can actually see what was happening, right? Remember that we already noted this, right? This sequential SMT, which was between Q4 of the previous year and Q1 of the current year, right? So due to the fact that we had, this right here, we would consider this as, accumulation, manipulation, and then distribution, right? Right here, you can see that we traded into this fair value gap, then, tapped into this balanced price range. Here, we tapped into the balanced price range, but here we did not tap into the balanced price range. And this is another type of, cracking correlation that we will discuss going forward, right? People saw this right here, and I will use the crosshair, right? Price traded above this high, right, in regards to the US dollar. But right? There was a cracking correlation between the euro and the US dollar. So people thought that this was sequential SMT, which it was not. And why is that? You need a larger range sequential SMT to cancel a lower range, a actual sequential SMT that is already underway. So this was already underway right here, as you guys can see, right? This was between Q4, right? Q4 and Q2. Here, right? This was not significant. Also, if you look at the weekly time frame, right? We had no closure above this high. It's just a wick, right? And also, due to the fact that it opposed the higher time frame cycle, its order flow, this would be seen as a SMT market structure shift. So this is a cracking correlation that literally says higher. Remember, we've had this high here for the dollar for literally since the beginning of the year, and we've been wanting to see price higher, right? We were bullish here. There was a gap here. Of course, we're going to be bullish here still, right? We had SMT here, right? Then we had SMT fill between balanced price range, right? And it's important to note that this is the candle, right? That, should be considered, to, be the, what do I call it? The primary factor in the formation of the balanced price range, right? So here, you see price trade into, the space of this candle, right? Between these two wicks, right? Which is, what's highlighted by these orange, rectangles. So you can see price trade into this gap, but it didn't go into the balanced price range in regards to the US dollar. It did so, right, in regards to the euro. It did so in regards to the pound. And what else was there? There was intermarket sequential SMT, right, in two stages, two cycles, the monthly cycle, then the weekly cycle, which is why we get these explosive moves, right? So everything is aligned. Everything was aligned. Everything still is aligned at the moment for order flow to continue as it already is. No one else talks about stuff like this. We were literally, while we were bullish, I had no idea why people were bullish here. While we were bearish here, it was insane to see everyone just thinking that price will go higher. I don't know why. I believe that it was, seasonal tendencies or whatever, they use. But we don't need that. Everything that you need is in the charts. Literally. Everything that you need is, can be found within the charts. And just as how you see this setup right here, and it's so clear, right, on the, the pound, is actually beautiful looking at it afterwards, right? Look at it. It's simply amazing. It is beautiful. The true open, right, and this is something else that you need to, note, right? I'm not sure if you guys realize this, right? But the true open of the congenial cycle, right, which we've talked about, it was here, right? So this candle right here, the opening of this candle right here, let me make it red, right? This was the true open of the congenial cycle, right? This candle right here was January the 1st. But remember, last year was Q1, this year is Q2. As long as there is sequential SMT, above a true open, this happens just as how you saw it, I showed you just now on the lower time frames. It's the same thing here. It's the same thing right here, right? Once there is sequential SMT, right, between, this one and the dollar, for example, right here, right, if you're focusing on the dollar, you're going to realize this. Price didn't go to this, right? Why not? We talked about this. I see so many questions. Like, if this already went above its true open of the year and there was sequential SMT, why would you expect this one to go here? If anything, this, indicates that price is even more bullish, because this in itself is another cracking correlation. Do you understand? Right? So here, price failed to trade below the true open of the year here. There was a failure swing. But here, we went above the true open, but we didn't do that here. So why are you shouldn't be confused. We've talked about this. You're not paying attention. You're not paying attention. You're like, hey, why are you bullish on the dollar and the dollar didn't go below its true open? Because the pound did. And if the pound did, the dollar or the euro doesn't need to do that. Literally. Why was I already always focused on the pound? Why it was just the pound, the pound, the pound? Because the pound was clearer. The pound was more clear. Right? And if you realize, we don't, as I've said before, we don't focus on gaps. No, we don't focus on breakers, not gaps, not bad, right? It's gaps only. So like even like right here, we don't care about this. We care about these, the gaps. And then when it goes to the lower time frame, like just by looking at this, if I take all the lipstick off, it'll look confusing. It'll just be like, oh, we had a stop hunt, and there was SMT right here, and then we had price trade into this gap, and then it just go lower. Okay, that's what I'm gonna do. No, it's way deeper than that. We had this literally. We had sequential SMT here. We were above true open. We gapped down. Right, there was a a market structure shift right here, which was sequential. Price traded back up, and there was literally 2 mini sequential SMTs here. It's literally a system. This is one of the highest orders that this can happen. It's perfect. It's literally perfect. Right? So this indicated the price would go lower, for, weeks. Price shifted, market structure traded back up. I was still bearish. Then what happened? It fell. And this is why. It has nothing to do with seasonal tendencies. It has nothing to do with COT data, which is useful if you're trading the commodity markets. Right? This is what we look for everywhere. Look at that move. It's insane. Look at the pound. It's beautiful. Like, literally. And we were trading here. There's a lot of people that caught a move here, but when it went up, they were probably scared, but they were not looking at the higher time frame. And then there were people again that, have seen your trades, you caught the sequential SMT here, which is amazing. But whenever there is not sequential SMT, right? Whenever you see, price symmetrical when comparing the dollar to the euro and the pound, are you listening? Whenever you see price symmetrical when you're comparing the dollar to the euro to the pound, then that's when you reflect upon the interest rate triangle. And it will be so obvious that this is literally the reason why price moves. You're like, there's nothing else behind it? No. But Michael said he didn't teach you the real way. Right? Everything is governed by this. Think about it. I made a post on Twitter, talking about time, which is, just stating some obvious things. There's 4 seasons in the year. There's winter, then there's spring, then there's summer, then there's fall, and it just repeats. We have four literal, phases of the moon, which each phase lasts for 7 days. I shit you not. Right? I know we're talking about the monthly cycle, right? Of time itself, displayed in the heavens. The celestial, what do they call it? The bodies in the, outside of our reach, abiding by, quarters. Literally, that's literally what it is. You can't say it's not, because that's actually what it is. They're just not going to be like telling you straight up in school. Even eclipses follow patterns. Even the day, you have morning, then you have afternoon, then you have evening, then you have night, then it repeats. It's the same thing. And that was one of the, main reasons why I had this, aha moment, whatever you want to call it. And it led me to literally just dig into through time. I don't care about price really, because price isn't going to move unless it's the right time. And then, right, just as how, the sun and the moon overlaps to give us, eclipses, patterns, to, if you know, you know. But yeah, here in the charts, you have, price must overlap with time for it to reverse. But price is the least of your concern, because if price just, runs a high, outside of the time that it's supposed to, there will be no reversal. It will not matter. Do you understand? So yes, we have, a cracking correlation between true opens. Well, price can trade below a true open, in regards to for example, the dollar, and then not trade above it, in regards to the euro, and then that would be a cracking correlation as well. It starts to make sense when you take the closures into consideration. So price closes above the high, price is above true open, there is sequential SMT. That's when price will turn around. It's not hard to understand. Once you begin to understand, then it will be easy. Right? It will become easy to know when to do something and when not to do something. Right? Here, right? Even here, we could see, right, sequential SMT between the index futures triad and the Forex market, right? So on the 4-hour time frame for the monthly cycle, right? So here, right, for example, we'll just focus on the euro and the pound for this, right? The euro, right, traded above this high, which was Q1 of the previous week during last week, right? Here we have the NASDAQ failed to do so, right? ES failed to do so, and the Dow failed to do so as well, right? And this was the cause, of price, reversing like this. But it's in a tight range in regards to the NASDAQ, which indicates, future movements. a lot of volatility to enter the market. Plus, all this geopolitical stuff that's going on will, have at least one of the, main index futures acting like this. So if you guys realize just now, like while going through this, the order I go through it, this is the way how, price reflects upon one another, right? So this right here, this triad calls all the shots. Why? The Forex market looks back to that for information. Then you have the index futures triads, the stock market on a whole looks back to the Forex market for information. When you can't find it here, then it will go here and search for information here. Right? So literally now, right, we would have to, I'd say, due to the fact that, all these things that are going on, everything that's going on right now, we need to be, I would say, on our toes, right? Wait for a sequential SMT to present itself where we literally, this was an amazing move last week. As we thought it would be, as we expected, of course, right? But after a move like this, you wanna pay attention to the lower high that you're closest to. So for now, where are we? Like just using common sense. We are in discount. Right? This is Friday's low. Right? We would wait for Monday, which is tomorrow, right, to see if there is sequential SMT, to see if we could get a pullback within this range. You understand? Right? That's what it is. We are literally, overextended here. It's very obvious. So we could expect some, retracement once there is sequential SMT to confirm it. Remember, that's what it is. And do not underestimate intermarket sequential SMT because it is more powerful and has more meaning than, typical sequential SMT. It's harder to understand, but it's worth it, in regards to applying it to your charts or your day-to-day analysis. Do not forget the true opens, right? So if price should, trade below this low, it should happen after there is the New York open, right? At least the true day open. If price continues higher, consolidates a bit, and then trades below here after the Q2 of the week is established, which would be 1600 Eastern Standard Time on a Monday, that would be even better to see the stacked true opens, right? That would be even better. But this low is important right here. This low is important than anything else here. Right, this low is important than anything else. This is more important than this gap, more important than this high. It's more important than anything else here. Why? It is the utmost low of the previous week. Right? And we are in discount. Do you understand? Here, this is an important high for the US dollar. This is an important low for the pound. Right? Very important. Right? Just as how, right, we just highlighted those lows, right here we can highlight this low as well because this was Friday's low. Right? This was Friday's low. Currently, we can see some strength building in the market, right? So we can see, higher prices before lower prices, just, fluctuations, right? We're not trying to just hold a trade forever, hold a direction forever, right? If, for example, if you traded here and you got over here, you're good. Below this low, you're good. right? Price goes back up, you got out here, you're good. You got in here, got out here, you're good. Got in here, got out here, you're good. Got in here, got out here, it's good. You're good, right? So it's literally about entering when there's sequential SMT and exiting on SMT, right? And what I just said is very specific. You enter on sequential SMT and you exit on SMT, right? It doesn't even matter if you're exiting on sequential SMT. As long as the SMT, you exit, right? There are just two things that cause this price to reverse. Further swings and stop hunts, right? That's the root cause of everything. Right here, you can see that, during the second week of the current month, Q2, we closed above this low here. Here we close below this low. Here we close below this low. Right here, right? And let's look at the clearer assets first, right? Because if anything, this will be the more reluctant asset class due to the fact that it is taking so much time to move. We have a lot of liquidity built above, right? Like it's insane the amount of liquidity that's above here, right? I would like to see liquidity here like literally get taken out, right? But yeah, we'll see what happens. I'll at least like want to see like some manner of retracements, and this is the 4-hour time frame, mind you. So even this right here, this small candle right here is a good move if you're like trading on the 15-minute time frame, right? All of this right here is insane moves, right? After the fact, it just looks like short, but if you zoom in, then you'll see. Because I don't think anyone here is going to be trading with the 4-hour time frame, right? And currently, I'm just trying to get you guys to understand the monthly cycle. Okay. So yeah, this low is important, and I will go to the 1-hour time frame so you may see that low, right? So this low is important, right? This was Friday's low, right? The lowest low you see for the ES is Friday's low, where you have this blank spot right here. That's Friday's low. And here we have Friday's low as well. Here we have Friday's low, which is the lowest low of the previous week, right? We have liquidity above these sides right here, as you can see. It's pretty obvious. But if I was supposed to draw a range, it would be something like this for the yes, right? This would be buy side, and this would be sell side liquidity, right? So literally, we don't care about these candles. We don't care about none of this. We just care about the high and the low, right? And this is why, order blocks don't really work that well, worse when they're like in the middle of a range, right? These don't matter because if price dips below here, there is sequential SMT, then it should go higher, right? So basically, right, high, low, waiting for price to break below, create sequential SMT, right? If it goes above and there is sequential SMT, then we would expect reversal the same way. But we don't do anything unless there is sequential SMT. So we're not going to just be in right now, just pressing buy. Worst of all, we're within the Asian session. So that would definitely be a no-go. Liquidity above these highs. NASDAQ. Whenever I say liquidity above these, that's literally just what I'm focusing on, right? That's what my eyes see. I'm just telling you exactly what my eyes are like. Okay, my eyes literally are like, yes, yes, yes. We want those. We want price to go there, right? So, take this and study, highlight the levels, wait for sequential SMT, right? Don't expect to win everything if you are ever taking a trade, right? You live in the gray area and you allow space, for mistakes, because you will make mistakes, right? Now here we're going to be going into something even deeper, right? Literally, save the you know best thing for last, to literally getting you guys to understand time more, right? So here, right, you can see that I'm using UTC plus 2. And why is that? Why do I use UTC plus 2? This is due to the fact that, the actual time that the algorithm uses. What do you mean by that? Can't be, because Michael said it's Eastern Standard Time. I don't know if Michael just doesn't know, or if he just pretends to not know, but like, this is what it is. And how can you prove that? We're gonna prove it, don't worry. So here, the beginning of this week, what time is it? 0:00:00. This is 12 a.m., the beginning of Monday in Switzerland. Why is it Switzerland? That's where the real banks are. That's where, even Rolexes are made there. Right? Like, literally, that's literally the money capital of the world. Have you ever seen an earthquake hit Switzerland? Hurricane? Anything like that? It gets you thinking. But yes, this is Switzerland's time, the capital of Switzerland, or something like that. But I know this is Switzerland's time, right? That's where, most of the money flows through. So everything is pegged to that time in regards to the algorithm, right? So Monday at 12 a.m. there is 6 p.m. Eastern Standard Time. So the actual Asian session begins at 12 a.m. Switzerland time. Literally 12 a.m. The Asian session would end at 6 a.m. in the morning. The London session would begin at 6 a.m. and end at 12 p.m. The New York session would begin at 12 p.m. noon and end at 6 p.m. in the afternoon. And the Asian session, or the afternoon session, or we call it afternoon session, would literally, begin at 6 p.m. their time and end at 12 a.m. midnight. Here, right, we can even see that clearly depicted here, and perfectly it aligns with, quarterly theory. It's literally just a puzzle. It's amazing, right? So each candle right here is 6 hours time, right? Each box right here, right, in regards to the daily cycle, these tiny boxes are the daily cycle, right? Those are the daily cycles. So this right here, as you guys can see, 12 to 6, that's one candle, which is this candle right here. That's Asian session, Eastern Standard Time. But this is the actual Asian session. This is the London session. This candle right here is the New York session, and this candle right here is the afternoon session. So it's 4 candles together that, makes the entire daily cycle here, right? So this right here would be literally, right, Tuesday at midnight, Switzerland time, UTC plus 2. This would be the true open, right? The actual true open of the week. If you draw it out in time, you'll see price straight above, right? Trade above it, stop hunt, intermarket sequential SMT, then it fell. Again here, right, you'll see sequential SMT between here and here. Then it rallied higher, then there was sequential SMT again between this high and this side, and it fell. Right? You were taught EST to just confuse you. Usually I keep, a few of these charts open with UTC +2 time. Someone said Switzerland is so clean you can lick the streets. Everything is, based on Switzerland time. Right? And it's so perfect when you literally just look at it. So here, right here, let me use this here, right? This was the high of Tuesday. You see Wednesday, we run above it during, where was this? I believe that this was the, let me see. Yep, this was the, what's it called again? The New York session. So we run above London and the Asian session, right? Then we fell. So when you study price like this, if you have time, it will begin to make more sense to you. Because you'll see that, okay, the actual true open is Tuesday's open in regards to UTC +2. Right? And this is just framework. This is just a base level to get you guys to, look into it. So, when we begin to decipher, more things in the months to come, you understand, right? You have to take baby steps, right? In regards to knowledge, right? You need to begin to understand this, right? First, like why it makes sense, like how perfect it is, like how it matches up with everything, right? Wow, this is literally just a puzzle. This is actually an algorithm, and it's all based on time. Yes, that's what it is, right? But you need to focus, on understanding this first. Then we will, go into different time frames that align with different, perfectly aligns with, each cycle, right? Because really and truly, each cycle has, 4 candles of specific time each, and only the closures matter. And with that said, we have been going on for over 15 minutes. Really? That's insane. I didn't even realize I probably talked too much today. That's fine. We have more to come. Hopefully you guys took something valuable from this, and it will be uploaded to WAP. I would say I'll get my assistant to do it within 2 hours. Right? So, yep, we will continue during this week. It should be a good week. Right? Look for sequential SMT. Remember to not neglect the interest rate trades, right? And you're not trying to trade it, you're just looking at it for confirmation of market reversals. This is not a theory. This is what it is. This is the literal nature of price. This is what it is. This is the truth. You can't disprove it. You can say it's not true. You can say it's a theory, because this is actually what it is. Look at every single reversal in price action. Compare everything. Compare the markets. Look for a sequential SMT, and I promise you that will be there. Have a wonderful afternoon or night, my friends.